Hello guys, welcome to our today's episode. In today's video, I'm going to teach you guys how to analyze crypto pair. First of all, when it comes to analysis, you have to understand market structure. So I'll take my time and I will teach you guys how to do market structure correctly. Now let's go. I hope you can see my system. You can see my charts. All right. Here on the trading view, I want to analyze top-down analysis. I want to analyze Binance coin using what? Top-down analysis. You have to understand what market structure is. When you fail to understand what market structure is, you miss it all. I have a friend that always tell me, he said market structure is the king. When it comes to trading, market structure is the king, guys. Now let's go in. Here on the weekly time frame, I want to analyze Binance coin. What am I supposed to be doing on the weekly time frame? This is it here. I want to spot the most recent break of structure. Where is the most recent break of structure? Is it this level? We have a break of structure to the upside here. And we also have a break of structure to the downside here. So which of these is the most recent break of structure, guys? Which of these is the most recent break of structure? Now, is it the up one or the down one? For me, the most recent break of structure is the down one, this one here. So we use the horizontal bar to mark what? The swing high. Now this is a break of structure. This is a break of structure to the downside. This guy, we label it what? BOS. Now BOS simply means what? Break of structure. Alright, this is break of structure to the downside. Now that we have this guy, this is the most recent structure on the weekly time frame. The next thing we'll do is to understand our market direction, the most current market direction, and we do that on the daily time frame. So you simply go to the daily time frame and then you arrange the chart to suit the screen. You zoom out. Now here on the daily time frame, we want to start what? Reading the trend. This is where we want to start marking out what? Our market structure. I told you guys that market structure has to do with such a move like this. You see market move down, create a higher high, go down again, create another higher high, go down again, create another higher high. Now this movement is what we call what? Elliott wave or market structure movement. Alright? Market cannot just move in a straight line, in a straight path like this. No. It doesn't happen. Market doesn't move in a straight path like this. Okay? So what you do is what? You need to understand that markets move in Elliott wave, meaning it breaks structure to the upside. As it continues, it breaks another structure to the upside. As it continues the move, it breaks another structure to the upside. Alright? This is what? Market structure analysis. So the same thing happening at this area, we want to see it around this chart. Now looking at it carefully, you will understand that we have a break of structure to the upside here, a tiny one. We have another break of structure to the upside. Remember the rule of market structure. When you have two break of structure to one direction, it gives you your bias. Now that we already have the first break, we have the second break, it simply tells us that this market is what bullish from this point. From this point here, it is what bullish. So we keep going gradually, no rush. And here, boom, this is the last one as it keep going up. Then after it hit this resistance level, we had what we call a change of character. This level here, boom. So now that we have this change of character, do we now say that the market has reversed from being bullish to bearish? No. I told you guys, change of character alone does not signal that market has reversed completely. No, it is just telling you that market is about to reverse. It is not that we have actually reversed. So you have to put that in your mind. Now we have a change of character. We are not bearish. The market is still bullish. All right. So having in mind that our daily bias is bullish, we are now going into the 4-hour time frame to look for an opportunity to do what? To buy the market. This simply is saying that buyers are stronger. All right. So you have no business going to the 4-hour to look for sell. No, you have to stick with the big boys. So from our daily time frame, we have find out that this area market is bullish. So you go to 4-hour to look for buying opportunity. Now this is the 4-hour time frame. Here in the 4-hour time frame, what are you looking for? You're looking for an order block. I told you guys something we call order block. I told you guys, listen, an order block is an area where institution place an order. Okay, and that order block is always a place we are looking forward to either buy an asset or sell an asset. Now, for you to see an order block that is valid, it must have a fair value gap. All right, it must create a fair value gap. Now this is what we call a fair value gap. You see this candle, we have, this is the last red candle before a move. All right, in this move that occur, we see that this candle get to this point here, and then there was a gap. This week did not fill up this gap. There was a gap. This is the gap. Look at it, guys. Gap. Let's go back to the 4-hour time frame. Yes, so this is on the 4-hour time frame. Now this is what we call fair value gap. This is what we call fair value gap. Now you see this space, this distance. You saw that this candle, this guy, this is the wick that was created, and we see another candle. This is a wick also. Now the distance is this gap. This is the last red candle before these 3 green candles. All right, now these 3 green candles, one of them open here and close here. This is the high. The other one left a gap, a distance before creating another candle. Now fair value gap has to do with just 3 candles. All right, 3 candles, but they left a gap. Why doing what? Why performing? They left a gap. So this gap is now the fair value gap. So whenever we see a fair value gap, we look down to see the opposite candle becomes our order block. This guy here becomes our order block. So you pick your rectangular bar tool and you fill it up. So this guy becomes what? Our order block, bullish order block, where we are waiting to buy the asset. So until price comes here,